Good morning. I'm Peter Milios from the Finance News Network. Stocks sold off sharply Tuesday after comments from Federal Reserve Chair Jerome Powell suggested that rates may need to go higher for longer, fueling fears of a potentially larger hike at the central bank next policy meeting. The comments indicated that the Fed may consider a larger rate hike than last month's 25 basis point increase at its next policy meeting on March 21st to March 22nd. Powell's comments raised the stakes for February's jobs reports out Friday morning, which could show a resilient labour market that allows the Fed to keep hiking. The Dow Jones Industrial Average shed about 1.7%, while the S&P 500 lost 1.5%. The Nasdaq Composite dropped 1.3%. As the major stock indexes fell, the two-year Treasury yield jumped to its highest level since 2007 at 5%. Bank shares led the losses as investors feared more rate hikes will tip the economy into a recession. Wells Fargo lost more than 4%. Bank of America, Goldman Sachs, and JP Morgan Chase lost more than 2% each. Mega cap tech stocks also tumbled, with Apple, Alphabet, and Microsoft last down at least 1% each. Meta has announced it's planning another round of layoffs that could affect thousands of workers as soon as this week. The job cuts come after the company laid off 13% of its workforce in November as part of a major cost-cutting plan. CEO Mark Zuckerberg previously told investors that 2023 would be the year of efficiency for the company. Elon Musk, the owner of Twitter, said at a Morgan Stanley conference that the company may break even on a cash flow basis in Q2 and has a chance to turn a profit. Twitter has been working on making its advertising more relevant, according to Musk. He has also highlighted the high debt burden of the company, which is about $1.5 billion annually, equivalent to its current cash burn rate. Despite attention Twitter receives, it currently generates very little revenue, making the opportunity to improve profitability startling, according to Musk. An area of strength for markets continues to be small caps. Paul Hickey, co-founder of Bespoke Investment Group, said the strength of small cap stocks is a sign of market resilience despite the uncertainty of the Federal Reserve's tightening path. The Russell 2000 index is up nearly 8% this year, outperforming the S&P 500's 5.4% gain. In commodity news, according to Darden Commodities, the cobalt market experienced its largest ever supply surge in 2022, primarily due to increased production of the battery metal in the Democratic Republic of Congo and Indonesia. Mined cobalt supply increased by 23%, which eliminated the large deficit observed in 2021 and resulted in one of the largest surpluses in the market at year-end. The cobalt market has previously caused difficulties for car manufacturers during periods of undersupply and raised concerns about hazardous working conditions in the DRC's informal mining sector. Overnight, all S&P 500 sectors closed lower. Consumer staples was the best performer of the bunch, whilst financials and real estate suffered severe losses. The SPY futures are pointing to a 0.8% fall. Thank you for listening.